This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, today we've got another old dog guest here, and this is a guy who is just has a great background in real estate in a variety of different capacities. His name is Jay Henrichs, and he's a serial entrepreneur, businessman, and real estate investor. He was born in Burlingame, California, and grew up in Cupertino and finally Napa Valley. I've got family in Napa Valley as well. As a youngster, Jay's real estate career started with hanging door hangers for his dad, who was a developer in the Clear Lake area. In the mid-'70s, he got his California broker's license and became active in development and land sales. Jay later became president of Langer Mortgage in Oakland, California, where he administered $35 million in assets funded by well over 250 investors. In 1991, the mortgage company was sold to Spartan Mortgage. Moving north to Oregon in the mid-1990s, he started a company called Cedar Mountain, where he bought and sold timber rights and timber lands. He later acquired his Oregon broker license and started developing housing subdivisions in the Portland metro area. Later forming the Silverado Group, LLC, he also became one of the top buyers of foreclosure and pre-foreclosure properties in Washington and Oregon. He got his Oregon mortgage banker license and founded Silverado Funding, LLC, a private money lending company. In 2005, after the Hurricane Katrina disaster, Jay flew to Mississippi to use his real estate expertise to address the housing shortage. His company provided more than 2,000 private loans to rehabbers who were renovating properties for renters in 8 different markets. Although hit pretty hard by the financial crisis in 2008, Jay rolled up his sleeves and was able to get through the crisis before moving back to Oregon. Today, Jay is a home builder, building 25 homes a year in Portland and 10 homes a year in Charleston, South Carolina. In addition, he funds over 200 fix and flip deals a year for fix and flippers in 15 different states. My goodness, Jay, you really have been everywhere. And talk about a serial entrepreneur there. I mean, you have started so many different companies in so many different areas. Gosh, welcome to the Old Dogs REI Network.
Well, thank you very much. And it's a pleasure to be here.
Well, Jay, you are, a well-known by me because I've been active ever since I got interested in real estate investing on BiggerPockets.com. And I think you have been a presence there for a number of years, and some of the content that you've given and answers and advice that you've helped so many folks in real estate investing has been such a great resource for us. But I'll tell you, with all the things that you have done, you do have a wealth of information. So it's a thrill to have you on the show.
Thank you very much. I'm happy to dig into any kind of questions you'd have about what we do or how it can help other people succeed in the business.
Well, great. Well, I kind of went over your bio there, so that, maybe there's some gaps you might fill in that in terms of, how you got involved in real estate. I mean, it sounded like it was already in the family. It seemed like a natural place to move into for you.
Yeah, I grew up in a real estate family. My dad was in it and was a land developer and seller of real estate, and like the Langer mortgage, that one, frankly, I kind of fell into. Mr. Langer was my dad's lender for years. And Mr. Langer had no heirs and had no succession. And so as I was kind of rolling out of selling land and real estate in Northern California, I mentored with him for about 2 years and learned the hard money end of it. And when he physically and mentally could no longer do it, we were able to buy the company from him and take over the book of business. And of course, my timing was impeccable. About 2 years after that happened, we had the earthquake and the war, and Northern California went through a deep depression. And so that was my first tutorial on how to work through workout loans and what happens when things aren't so great. So I've been on. There's a lot of people, nowadays that just started investing in the last, after the crash, and everything's rosy, and there's not a lot of us old guys left that have, invested through the cycles. So that was my first cycle. That 89 to 92. Those were some pretty rough times in Northern California, but we got through it, and Spartan made me an offer, and we sold out. They wanted our client base, and then I moved on to Oregon.
Well, you're in beautiful country up there. Oregon is just amazing. I was talking off the air with you about that, just, how it was a big part of my childhood. We used to go up there, not only go fishing for salmon, but we used to love to just travel up through Oregon and, everything from the redwoods to all it's just a wonderful, beautiful place. I think that there's a lot of things you could share with the folks here. One thing that's really interesting is that now your dad, was he on the financial side, the banking side of it, as you were, or was that something you just kind of moved into?
No, he was developed sales, and his strong suit was sales. I mean, we would have, we had a very strong sales side. We had offices in Cupertino, and we had an office in Los Angeles, and we were in the land business. You think back to if you've ever watched the movie Glengarry Glen Ross, we were somewhat like that. We were selling recreational land to folks, and people would come up and buy their lots. My dad would buy, big parcels of land, subdivide them off, and then sell the properties to folks that were looking to buy retirement properties and for investments. A lot of people back in those days, that was their foot in the door to get started in real estate. And, the land business has been going since the turn of the century, when it started down in the high desert where you live, down in LA, and then down in Florida and all over, California and Arizona and so forth, Colorado. So it was that business. That business is not so prevalent anymore. A lot of investors in those days, buying land was, that was the way to get in. Cash flow was not, it just wasn't as in the forefront of people's minds like it is today. Today, people getting started in real estate have gravitated to the Midwest, where, they're buying homes very, very inexpensively. And the idea is that, a renter will pay for their mortgage, and it's all about cash flow. So the land business and that, the way that was set up is just no longer there. You still have people that'll buy, recreational land because they want to retire or they want a second home. but it's nothing like it was, when we ran it in the late 60s to about the middle 80s when it started to taper off drastically.
Yeah, my dad was one of those investors down here. He invested in Apple Valley, and I, as a kid, I always kind of never understood it. Why would you want to buy a piece of desert here, But that was huge. It was huge, and that was just part of a person's investment portfolio. Really, is buying a chunk of land somewhere,
Well, back in the days before you had, Subdivision Map Act in California, a developer could go out, buy 1,000 acres and chunk it into 5-acre lots or half-acre lots or whatever by just recording plats. So if you go to San Bernardino County, Riverside County, there's literally 2 to 3 million platted lots sitting out there that have never been developed.
Wow.
Now, those lots get traded in tax sales all the time, and there's companies that they do that. They buy it at tax sale, and then you'll see them in the back of Hunting and Fishing magazine, buy a lot for 50 down, 50 a month. That's that inventory. There's a few guys you'll see on Bigger Pockets, the Land Geek, and a couple there's a couple gurus that sell how to do that, and that's all they're doing is they're just doing the same stuff that's been done for 100 years. You buy an old tax sale, non-buildable, basically piece of property. The difference of what we did is my dad would buy these plats or these old shadow plats, and we would actually put the streets and roads in and the utilities, and people could actually build on them. There's a huge difference between selling them as is and selling them something that's buildable. And, we could have a whole show on this. I don't want to get totally derailed here, but it's really not germane for what most folks are looking to do now, which is cash flow. Everything's about cash flow now, and where they get the cash flow is, either they have the money to invest in Southern California or the West Coast, or they're getting started. So, get yourself started in real estate tends to be in the Midwest. And you see that talked about a lot on Bigger Pockets. And really, when we were in the land business, when we were doing that, that was our tagline: get yourself started in real estate. That's, buy a lot. This is your first entrance into real estate. Because, the houses in Cupertino already got to $100,000 back in, the late 70s, early 80s, and people were priced out. So, they could go buy a lot for $8,000. Well, now you fast forward to today, and everything's, Cupertino's $2 million, and they can go out to the Midwest and buy a rental house for $70,000, $80,000, or they can take huge risks and, buy the ones that get marketed by some guys in the $30,000-$40,000 range, which, basically are, in my humble opinion, are not appropriate for out-of-state investors. They're only appropriate for locals that, are right there, can manage it, because those are, your bottom barrel tenants, which are pretty tough to deal with. They need full-time care.
Yeah, you definitely need the education to be able to do that, and the strong boots on the ground if you are going to be doing that.
Yeah. Yeah. Exactly.
Well, what's really interesting, I know some builders here in Southern California, and almost everybody's stopped any kind of building activity, at least that I know, because again, in SoCal, they say we're really at the crest of that bubble, and that values are just sort of peaking here in a lot of the properties. So building homes doesn't make a lot of sense right at this time. But you're going gangbusters. It sounds like. Portland seems like it's been a booming area for the last few years.
Yeah, I've identified two markets that, in my mind, have legs. Portland, I became an accidental builder. I had my hard money company up there, and during the downturn, I had builders that defaulted, and I ended up taking the homes back and having to finish them. And I got in there, and I'm thinking, okay, well, this isn't so tough. And so at the end of the day, I realized I took 100% of the risk anyway. I might as well start a building division, and that's what I did. I'm not getting it over my ski tips. 20, 25 houses a year is a modest builder, but in the Portland market, it would be, in the top 200 for sure. The reason in the Portland market is there's not the land. you just can't go out and buy a parcel of land and develop 200 lots and build them all out like you do in California. Everything is like infill there. So it's very hard to find the land. And then it takes a couple of years to get it developed. But what happened in the Portland market is it didn't have a lot of hangover inventory like California had during the recession, or Vegas or Phoenix or Florida. And so it only took, like 2010, 2011, the hangover inventory was gone. Boom. But what happened was the banks got very conservative and nobody was prosecuting any new plats. So we didn't build a ton of lots that were sitting there vacant, like you had in these other markets. So the lots weren't there. Nobody was prosecuting new plats. The banks weren't lending on new plats. And so we had a 5-6 year period there where no new inventory was done. The market up there, the job market and the economy has been very, very brisk and strong. So we have a shortage of 30,000, 40,000 houses. We were building 10,000 doors a year, 12,000 doors a year for 20 years. In 2009, we built 700 doors. And then the next year, 2,000, and the next year, 3,000. So you can see, the first year we're behind 10,000 doors. The next year we're behind 8,000 doors. It didn't take long to get up to all of a sudden we have a 40,000 door shortage. Ergo, rents have gone up, in some cases 50% or more in the last 3 years because there's just simply a shortage of housing. So I'm on my 100th home that I started when I started this in earnest about 3 years ago. I'm on my 100th home being built, and I've only built 3 that didn't sell, in the framing stage. Are pre-sold, closed 10 days after certificate of occupancy. So for the builder, that takes a lot of risk out of it. Now on the flip side, we have a shortage of labor, and subcosts have gone up. So it's still squeezing margins, and the land costs, the locals that own the land, they've seen everything go. So typical people that own land, they extrapolate out to the house, and the next thing you know, they always want 50% more than you can make the land work at. So it still creates a shortage. Where you have a 5-acre lot that makes sense at $500,000, the next thing you know, they want $1.5 million for it. It doesn't make any sense, and it just sits there and never gets developed. Ergo, more shortage. And that's kind of what's kept that Portland market going. You have an urban growth boundary that precludes any kind of sprawl, and you have a huge demand because it's the number one in-migration state on the West Coast. And, more people move into Oregon than any other state, per capita on the West Coast. So and it's just continuing that way because of jobs and quality. A lot of people come up to Oregon just, that whole quality of life type situation. They want out of the rat race, and they want to live up in Portland.
Oh, sure.
So then you extrapolate that out to the next market I found 4 years ago. Actually, a client of mine asked me to do a loan there. I did it based on my long-standing relationship with this client. And I'm looking at it and I'm going, wow, this looks really interesting. And I'm pulling up the maps. I did it sight unseen based on his, I've been doing business with him since 2002. But I'm pulling up the maps. I'm looking at this and I'm going, oh my God, this is just like this is like developing in San Francisco. Charleston sits on a peninsula. It's surrounded by water on 3 sides. There's a huge shortage. Boeing's moving in. Volvo's building a new factory. Mercedes is building a new factory. The cruise industry is building an embarkation, debarkation. There's 16 hotels under construction. This place is booming. so I hopped on the plane and I got a GC I knew in Vegas and who lived in Hilton Head. I wanted to get out of Vegas. I said, if you go out there and get set up, I'll feed you lots. I'll put you into business. And so we're on it's tougher there. It's hard to get velocity there. So in 3 years, we're at 30 some houses, but really nice stuff and margins, and the values have held. And again, we out of all 30, I'd say only 2 or 3 were not sold in the framing stage, or when, within 2 weeks of us putting them on the market when we wanted to put them on the market. So I'm really, really bullish on that city as well.
Why is it tougher to get velocity there in Charleston?
There's no land. It's surrounded by water. It's all marshes.
Okay.
And so you're dealing with existing lots of record, and it's like in the city of Charleston, it's all infill. And then on top of that, it's old infill, and you have areas where you have land that's been there since the 16th, 17th, 1800s, and you'll look and you're going, what's going on with that lot? Well, it turns out, somewhere down the line, somebody didn't probate the estate correctly, and the titles are all buggered up, and you can't do anything with them anyway. I mean, I have been working on one right now. I've been working on it for 4 years.
Wow.
And then the state of South Carolina has very arduous quiet title and tax sale rules. Everything has to go 10, 15 years. And so it's just, so then you take properties that just can't get title insurance on. You take a shortage of land to be built on, and a huge demand for the product, especially from the millennial that wants to live close into the city and ride their bikes or walk to the pubs and the restaurants and all the exciting stuff that Charleston has to offer in the downtown core. And all of a sudden, the first lots I was buying there were 5 years ago were 40,000, and now they're 200. And the first house I built was 350. If I had that house today, that was 3 years ago I finished it. If I had that house today, I'd probably sell it for 6. That's what's happened there.
Do you ever consider going a little further out, or it really there's not the demand yet? I have.
I've built some out in what's called North Charleston, which to the locals there is kind of semi the hood, and we've done okay there. We're pioneering in that $300,000 range, but it's not quite as strong. The downtown, there's just only so much of it. And your buyers come from all over the world, and it's a world-famous city. And heck, half the houses we're building are sold for cash.
Wow.
Yep.
Amazing. Yep. In Oregon, how are you getting your land there for the most part?
We get our land usually through we've plucked a few right off MLS first day it gets on the market. Otherwise, it's usually through guys that specialize in doing land deals, and I guess you could call them wholesalers. But we usually do some sort of, they're usually in the business, and it's usually some sort of quasi joint venture with them. And for me, by the time it's already gone through, let's say if it's already got to another developer builder, there's no money in it. I'm not going to buy it. I have to be able to buy it from the farmer or the original owner that owns it. If I can't get it at that price point, and at that time, I'm not going to buy it. The bigger builders, Lennar, Horton, those guys, they'll buy ready-to-go property, and they'll buy from a guy like me. Like on the 23 lots that I'm building on right now, Lennar offered to buy all the lots from me, cash, boom. And we declined because I can't replace them for what I'm in them. And I'm one of the few there that can actually get a construction loan to put in streets and roads. So my bank has done 2 for me, and I'm the first 2 underground loans they had done since 2006.
Wow.
It was pretty funny. My banker and I we're talking about, now, how do we do this again? So I was pretty proud of that.
Wow.
Those are high-risk loans. There's no houses there. And at least with the construction loans, when you're done, you got a house that can be rented. When you're doing land loans and lot loans, if your market tanks on you, all you have is lots, and there's no income on them. So those are the toughest loans to get.
Do they have sewer and electrical already out there?
Oh yeah. No, these are all fully paved roads, sewer, water, storm drainage, the whole shot. Yep.
Well, you've been doing this. I'm trying to figure out here, 50 years? 40 years, a number of years, right, that you've been involved in real estate. And, just looking at the numerous things you've done, what would you say was your sort of biggest mistake that you really learned from in your career?
It's hard to do that. I guess if I look at a couple big mistakes, one was not buying every piece of timber ground I could have bought in 92 to 93 when I first got to Oregon before the prices just skyrocketed. Two would be ever selling anything that I owned in Palo Alto. I owned 3 houses there. Should have never, but I bought all in the $200,000 range. So, but I never thought they would go up past like 300 or 350, and I never thought they would ever cash flow. So of course I had to sell those. And then, hindsight's 2020, I guess, at the zenith of our company in 07 or so, I should have stopped lending and I should have sold everything I had and retired. But I didn't. 08 hit, and I spent 2 years unraveling all this stuff and, losing tons of money like any other lender. But you don't see it coming, and we were making loans at 60, 65% ARV, and, with full-blown third-party, full-blown appraisals. But, if you have a property that's worth $150 and you put a $90,000 hard money loan on it, to a flipper, and 8 months later after the crash, the most anybody will offer you for the property is $35,000. There isn't much you can do about it.
Yeah, that's for sure.
Other than to lick your wounds and put money together and go start drilling and buying it and try to income average it, which is basically what I did.
It's so interesting, because I had a lot of great folks on the show. One of them was a guy named Sam Freshman, who, he's 60 plus years in the industry, and he almost said the exact same thing. That I sold property I should have held on to. I should have bought more. It's really interesting as you get the perspective from folks that have been around for a while. That's really good feedback.
Well, there's a lot of truth to that. Hindsight is 2020. I mean,
right.
Woulda, shoulda, coulda. For
right.
Sure.
What would you say is your biggest success in the years that you've been in real estate?
Well, I've had success. Timber was extremely successful. And I love that business. Why it ran.
Now, why aren't you still doing that? Just out of curiosity.
Okay, so the timber was a moment in time, and you had to understand the timber business. The Japanese, it all tied to the Japanese economy.
Really?
What happened was, coming out at 91, 92, when I first came to Oregon and ran into my partner I did this with, because I didn't know a pine tree from a fir tree from a whatever. I was just a real estate guy. He was a logger. He didn't know anything about real estate. He called it realty. And so we met in Hawaii, of all places, around a pool. And he starts describing this to me, and I just sold my mortgage company. I'm looking for something to do. And what had happened was, coming out of the 80s of Oregon, the economy in Oregon was very bad in the 80s. Economy in California was very good in the 80s, but it was just starting to ramp up. So what happened was a lot of the timber was still depressed. The log prices were very depressed on a domestic side, because in the early 90s, there was still not a lot of building going on in California. We were still coming out of that 89 recession. So your domestic log prices were very low. But think about what was happening in Japan. Japan was just cranking, and China was just starting to crank up. So the Japanese also wanted first quality logs, and they would pay for it. So you could buy in Oregon and Washington, Southwest Washington, it has the best quality fir basically in the world. And they would pay double, triple what a domestic log would sell for. Well, that led to a niche. And there were export markets that could be had. And my partner knew how to do that, and I knew how to fund it. And so what was happening was you still had the hangover of people that would own these bigger timber tracts, and they would be talking to a local that didn't know anything about the export market, and they would price the timber literally right on the MLS, like it's domestic timber, and or they thought, it had little or no value to it. So we would roll up on a 100-acre farm that the realtor was trying to sell just as a farm and a house and put no value in the timber, and we go out and go, okay, there's $500,000 worth of export logs on this. And boom, we'd buy it, log it, make our money, and turn around and list the property, sell it for usually what we paid for it, and all in 6 months. So it didn't take long. It took about 2 or 3 years, and the next thing you know, the word gets out and people understand what's happening, and then all of a sudden the competition happened. And then the Japanese economy cratered, and the next thing you know, they're paying $1,200 a thousand for logs, went down to $600. And so the profit margins went right with them. And the domestic logs have been $400, $450. Mm-hmm. And it costs you $250 to log them. So your stumpage was only $200. But when we were getting $1,200 stumpage and it cost us, $200, $250 to log it, we were making $1,000 sending our export logs out.
Wow.
I mean, we made some home runs I can't even tell you. So,
what a kick.
Yep.
Wow.
Yep. So that's kind of been I kind of look at, what's happening and I've run into all these great people throughout my career, and I keep my mind open to new opportunities.
That's great. Well, I don't know what you know about our show, but our focus is on folks that are 50 years and older. And a lot of these folks are approaching retirement or they're already in retirement, and they're concerned about being able to have the funds to be able to do what they want to do and whether or not the funds they have will last. So many of them are looking at real estate as a possible way to be able to supplement their income or to be able to grow their resources, their current resources. Really be curious about your advice. Now, granted, these folks don't have the advantage of all of your experience and knowledge. They're starting later in life, and that's really my story too. I mean, I only started investing a couple of years ago, and so what advice would you have for those folks? What do you see as a viable means for them?
Well, I just look back at, especially when I had Langer Mortgage, where Mr. Langer had spent 30 years building that company in Oakland. And I think of all the investors I had, there were 250 investors. Most of them were over 50. And most of them had started in rental real estate. And they maybe got a little burnt out of dealing with the 3 T's. And they moved into note investing. And they moved into finding a great hard money lender, like a Bruce Norris down in your neck of the woods, and other folks, for good, consistent cash flow. That's way above CD rates. And, you get with a good broker who will do really good hard money lending, and you can do really good that way. You can also, for folks that want to get into the rental business, obviously there's all sorts of markets to do that in. The Midwest and Upper East Coast and Deep South, offers cash flow. However, that requires a lot of getting hooked up with the right companies. If you get hooked up with the wrong companies, you can have issues. Same with the wrong hard money lender, it puts you into bad deals. But those are 2 ways for folks if they want to diversify out of the stock market, or traditional type of financial products. You have deed of trust investing, and you have rental properties. I'm a big proponent in first deeds of trust performing, and I know there's a lot of talk goes on BP and the internet and everything about non-performing notes and buying seconds. I see that as a lot of work and a lot of risk, but those also can be quite fruitful if you got the time and energy and understand what your risks are and you want to slog through it and do that. Those can return even higher returns. But you can get with a lot of these funds. The crowdfunders have put up some pretty nice product, although I think some of them, and it's well chronicled, got a little over their ski tips. They had so much demand to put the money out, and so many folks that, they were making, it was easy to make the loans, but they didn't have the back end to support it. And we're seeing a little of that on some of the internet forums where customer service is lacking a little bit. But those are some options for folks.
Great advice. I appreciate that. Excellent. Well, Jay, you as I listen to you, it doesn't sound like you're anywhere near to slowing down. I mean, you've been doing this for a long time, but you're still going gangbusters. What's sort of ahead for your future? I mean, you're just going to keep doing this as long as you can, as long as you want, or do you have any kind of plans for any change there?
I don't. I really don't. I mean, I don't know what I would do. I've already done the play golf 150 times a year and
do you want to
all over the world.
Collect pine cones or something?
Yeah. No. I'm going to, and you know what's fun to me is all my guys that I do, and girls and gals, I mean, I do quite a few women as well. Almost all of them are 30 to 40 in the primes of their career. They really appreciate what we do for them. And they're all, they got the energy and they just lack the capacity, the capital. And so it's really fun for me to help them, get to the next level. And then a lot of times they'll morph into not needing a capital partner anymore, or get to the point where they're bankable, and, they don't need somebody like me that charges more than a bank would charge. But no, I don't, retirement is not even close to anything that I would do. And that's, if I think back on Mr. Langer, I mean, he was behind his desk until he just about expired. And if I could be doing the same thing, I'll be doing the same thing. As long as I'm mentally capable and I'm not goofing up, I'll be doing deals.
That's really neat. And the one thing that the folks listening probably don't know is that you do spend a good portion of your time giving back. I mean, on BP, I think you've answered, I don't know how many of my questions, just you may not even know it was me, but way back when. Just the fact that you take the time to do that, which is time consuming, and, just sharing your knowledge and experience with other folks that are, trying to get started, or are in the midst of a crisis like I was, I think, in one of the ones you responded to with a property manager. But, it's really neat. And the fact that you're not, that you're in no hurry to retire. I can't even picture what that would be myself, to be honest with you. It's just, just sitting around doing what, and and I don't play golf, but, I like keeping my mind active. I mean, the challenges, you've got a lot of stuff you've got to, it's kind of fun. It keeps it keeps me young, and it keeps me learning new things all the time. I just love it.
Well, the one thing, if I look back on one of the greatest skills I ever learned in high school, and that was how to type, and type very well. So when you see me posting like that, the reason is I still type like 50 words a minute.
You must, because you have you have some pretty extensive comments sometimes. It's great. Good stuff.
And I don't check my punctuation, and I maybe will spell check if I feel like it. I'm like, hey, if they're going to criticize my punctuation and my spelling, but I'm not going to spend the time to go back like I'm writing a letter to somebody and correct it all. So I just got to bang it out there. Although I am toying with the idea of doing something a little more formal in training, not necessarily a guru type thing, but something that would be highly modest, but folks that are motivated and need some, more detailed type information. And, I was thinking of just a very modest fee, just so I know they're actually interested and they're going to listen to me. And then, I've been toying with that idea. because I get a huge amount of people that will write me all these detailed things, and that I don't have time for,
Right.
And I'll write them back and thank them, but I'll say, hey, I'll write it out on the public forum, but I don't have the time to take care of your personal things. So I'm thinking there might be a need for somebody, but I would want to have a minor monetary investment by the people so that I know they're listening to me anyway.
That's a good idea. I mean, if I could put in my suggestion here, one of the areas that we have an abundance of information is the flip and fixing area, the rentals, the apartments, multis. But, there's nobody out there that's talking about the development side. And you've got such great experience in that area, and most of us are intimidated by it. Buying the cost of construction. The getting contractors aren't going to take advantage of you. Blah blah blah. To have somebody there that's a voice for that, that'd be awesome if you happen to go in that direction. So that's my little bid for if you do that.
Yeah, I don't know how big that market would be. Simply because the development business is a very advanced strategy. And most of the people that if they're going to do it are usually already fairly experienced and stuff. But, happy to help. Most of the posts I see on Bigger Pockets about development are, frankly, the people are they're totally not ready for prime time. If they try to do it, they're going to get killed.
Well, maybe you got a guy that's been, flipping, fixing for he's doing, 40, 50 houses a year or something. And maybe he's ready to move into something a little bit more, challenging. Who knows?
Yeah. I mean, if there was a demand for it, like I said, I wouldn't mind having a little cadre of folks that I could help and make it worth everybody's time and effort. And if they thought they were getting value, then, maybe get a little bit of compensation for my time. But that would be it.
Oh, great. Well, this is, we've zipped by on our time here. This is a shame because I could probably talk to you for a couple hours, and I'm sure you'd just enjoy that, right? Just having me pick your brain. But we're at a point where it's called our Wrap It Up session, where I ask you a series of quick questions. Hopefully, you give me as quick a response as you can. That's valuable for our listeners because they can get resources that mean a lot to you, and that could open them up to these resources as well. So if you are ready, we can go ahead and start our Wrap It Up. Are you ready? First question, favorite real estate book?
Well, the one book I've read, business real estate book, is Traction. I like that book a lot. I think that can be related to real estate.
That's great. Good choice. Mm-hmm. Favorite business book, just general business?
Well, I think my dad gave me Napoleon Hill's Think and Grow Rich.
Yeah, that's a good one. Sure.
Yep, I think that's timeless.
Sure. How about most valuable website for success?
That's a tough one, but I do believe Bigger Pockets used the right way is a pretty valuable tool. I know I've made some very key connections off of Bigger Pockets, so I would put a plug in for them.
Great. How about, do you have a favorite app that you might use on your phone or anything?
Yeah, but it does have nothing to do with real estate.
Oh, that's okay. What's it called?
I like FlightAware to watch the airplanes.
Oh, yeah.
And,
I love it.
And then I have 4Flight for my own flying needs, for my own airplane. So pretty much all my apps are geared towards aviation.
Oh, that's a kick. You're a pilot, huh?
I am, yeah.
Oh, I didn't know that. Okay, that's cool. Great. Yeah. Okay, how about favorite quote?
I got to go with tough times don't last, but tough people do.
I like that. Well, final question here. This is sort of I call it sort of my apocalyptic question here, is if you lost everything, everything of value, monetarily in your life, and all you had was $1,000 of cash, what would you do with that $1,000 to sort of relaunch your real estate business?
Well, that is a tough one. Well, I'd have to say I would be out in the Midwest where you can trade houses like used cars. I'd go into the used house business. I'd be flipping houses in the Midwest.
There you go. And you'd probably go in with a no money down, or get the seller financing. And
I'd be buying a house for $1,000, selling for $3,000, pocketing the $2,000. I mean,
yeah,
you can do that out in the Midwest.
It's true. You can get houses for $1,000. That's true. Good point. Well, gosh, this has been so great, Jay. You have provided us with some great information. I'm sure there's a lot of people that would love to find out more about you or what you do, or I don't know, any kind of a reference that you would want to give folks so that if they wanted to try to reach you or get a hold of you, that you could provide something there.
Sure, they could just send me an email to my email if they'd like.
That's great.
Yeah, it's JAY at JAYL, and then my last name, Henrichs, HINRICHS.com.
Another place, I don't know, if you don't mind me throwing this out, I think, just on Bigger Pockets, you're on there as well. And I know if, people post.
They can always hit me on Bigger Pockets for sure.
Yeah, that's great. Well, Jay, this has been fantastic. You've provided some great information for our listeners, and gosh, I love to have you back sometime. I'm sure that you barely touched on the information that you have, but I really appreciate that. But we're not over. It's not over yet because we still got that overhanging closing howl here. So if you can go ahead, you got the door closed. Hopefully, you're not going to scare your granddaughter. I understand she's okay. Why don't you go ahead and give us your? I mean, you're up in the the mountains there. You got wolves, coyotes, all kinds of stuff. So you should be able to do a great howl.
Oh, how's that?
Okay.
That's the best I could do.
That's okay. Hey, that works. Okay.
All right.
All right, Jay. Well, thank you so much for being on. I really appreciate it, and even putting up with my howl request here. So, but. Also, I want to thank all our Old Dog listeners out there for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note, Old Dog listeners, everything presented here will be available through our show notes section at olddogsreinetwork.com/blog. So everything he's mentioned, if there's any links in there as well, they will be provided in that show notes section. Well, that is the show for today. Remember, cash flow is king, real estate investing the means. And until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.